Benjamin Franklin always said that, if you fail to plan, then you're planning to fail. I urge people to stop, kind of winging it when it comes to putting together portfolios, financial plans, putting together their retirement plans, and get something rules based within some guardrails, document it, so that way you take all the emotion out of everything. Uncertainty, fear, get rid of it. Get it out of your plan. It has no place in investing. You need to have rules that you're going to follow. If this happens, I do this. If this happens, I do this. So once you've done all the hard work of putting the plan together for all the possible scenarios, then it's pretty simple. Stick to it. Just stick to it. Good morning to everyone. Good afternoon. Kind of depends on where you're tuning in from, but I want to thank you again for joining. For those of you that don't know, I do see a couple of names I don't recognize, but my name is Jamin Garabedian. I'm the founder of Assurance Wealth Management. And I'd just like to start by saying Happy New Year to everybody. I know it's towards the end of January already, but these last couple of years have been pretty interesting to say the least, and we made it through. And that's all we can do is kind of take things one day at a time and do our best to move forward. Do see a lot of familiar names in here. A lot of names that have attended previous webinars last year. We did host quite a few of them last year, and we will be doing that again this year. We will be back on track doing these once a month. So every month we'll have a different topic. Some months we usually have some specialists in here to discuss, kind of the topic of the week or the month, whatever it is that's going on that month. Let's see here. I do have some notes written down. I will let you guys know that you will see me looking down occasionally. My whole family, all 6 people in our house, have been sick pretty much the entire first month of the year. So, I did a lot of research and stuff to be prepared for this webinar. I haven't memorized it or memorized even my talking points like I normally do. So I will be looking at my notes and going through that. Plus, we have a lot of statistics that we're going to go through, and I don't have those all memorized. So, as always, let's get the disclosures and disclaimers out of the way. First, for anybody that's part of the SEC or compliance professional that watches these, while a lot of you, I am your financial advisor. Some of you, I'm not your financial professional. So for the sake of today, for the sake of this webinar, I am not giving any financial advice. This is not intended for you to go out and take any action on this. This is for educational purposes only. Please consult a professional, do your due diligence before you make any sort of changes to your financial life or your portfolios or anything that you're currently doing. All right. Now that that's out of the way, hopefully our compliance officers and SEC are happy with us after that. What are we going to cover today? First, we're going to take a look back at 2024, kind of highlighting some of the key events that define the year, some of the lessons that we took away, and we believe that as investors, you should be able to take away as well. Then we'll shift gears and we'll talk a little bit about 2025, what we can do to prepare for that. And by the end of the session, my goal is that you will walk away at least with a little bit better sense of how to navigate uncertainty in the financial landscape, because I think we can all agree over the last few years, if nothing else, there's been a lot of volatility and uncertainty, and we want to make sure that you can ensure your financial goals stay on track. So when I think about 2024, and one of the key themes that stand out for me, like I said, is the importance of operating under uncertainty. Investors kind of faced 5 major questions last year, each one significant in their own way, but they did tend to tie together. They create a lot of unpredictability, not in just the markets, but in our everyday lives. So let's take a look at kind of what these were, and we'll go through them one by one and talk about what we kind of learned out of each one of them. The year started pretty cautious. We had a little bit of optimism when it came to inflation. It had fallen to 3.1% in January, and many expected this trend to continue. But as seen time and time again, inflation rarely moves in a straight line. By March, it ticked back up to about 3.5%, which was a little unsettling for the markets. Fortunately, inflation began to decline, and steadily after that, hitting the 2.4 mark by September, which was the lowest since February of 2021. And while this was great news, it was a reminder that patience is kind of the key when dealing with inflation. Inflation was a big issue that we heard all over the TV. When it came to the price of eggs, the price of milk, just everyday groceries, just everyday living, how inflation made such a big impact on people. And while I can't tell you what to do in your everyday lives as far as your shopping list is concerned, a lot of more of what I want to address today is kind of your financial plan and the investment side of things, how inflation affected that. So the lesson here is pretty simple. If you have a strategy in place that's designed for your specific goals and designed for the long term, stick to it. Stick to your strategy, even when the path gets a little bumpy and inflation's kind of going all over the place, volatility's going all over the place. The, the idea is that if you have a good plan in place and it's a well thought out plan, it's a documented plan, stick to it. Now, the other part of inflation, kind of its partner in crime, is interest rates. And the Fed started the year with rates at about 5.3%, which was the highest in decades. These elevated rates kept inflation in check, but also kind of cooled down the economy, leaving a lot of people wondering, when will rates finally come down? That question wasn't really answered until the fall when the Fed announced its first rate cut, which didn't happen until September, followed by two more rate cuts in October and November, which by year's end had the rates drop to about 4.6%. So we did get some some year end rates, dropping. And that's kind of what everybody was looking for. And while rate cuts, aren't just an economic event, they're kind of signals of progress. Investors who stayed focused during the wait of those rates kind of reaped a lot of rewards later in the year, and they got to see some significant gains later in the year. Yet again, I mean, we hear people all the time warning us of recessions. I mean, I can't even count the number of years now that we've heard economists warn us of an impeding recession, rising rates to combat inflation, and all this rhetoric that you hear all over the news. And typically, historically, that has led to what they call a hard landing, where the economy cools to, I don't know, too much, causing layoffs and contraction. But that just didn't happen in 2024 yet again. We have every year that somebody's saying that this is going to happen. It just hasn't happened yet. So instead, when you look at last year, GDP actually grew. We were at about 1.6 in the first quarter. I believe it was 3% in the second quarter and 3.1 in the third quarter. So growth for the fourth quarter hasn't been finalized yet, but they're anticipating about 3.2% growth in the fourth quarter. So against all odds, we kind of achieved something, I guess rare in the eyes of economists, which was a soft landing. So what can we learn from that? What can we take away from that? What can we use from that? Ignore the noise. The talking heads that are all over TV and the fear mongers that you're going to hear all over TV and in the news and on social media. Uh, you know, just focus on fundamentals. Focus on your plan. And if you've spent time putting together a strong plan, trust it. Don't let emotions get in the way. Don't let emotions take charge and things like fear or uncertainty change your plan of action. You put it in place for a reason. And if it's a well thought out, well documented, step by step plan for the long term, stick with it. Now, the next topic is something I kind of, it's always touchy with a lot of people, and it's the election. And, left side, right side, down the middle, it doesn't really matter. Okay. When it comes to your money, when it comes to your financial plan, don't get political. Okay. Look at facts. Don't look at opinions. Um, so when we're talking about elections, they often create kind of a lot of market volatility. I mean, they almost always do, and a lot of uncertainty. I know, personally speaking, that with a lot of our clients, we had a lot of gains between October of 2023 and say June of 2024. And with election season kind of coming up, in late summer, We decided that the prudent thing to do there was to take a lot of gains off the table and then reinstitute a lot of the hedges that we use and re-protect those gains for the second half of 2024, just in case the election volatility and uncertainty happens like it normally does. And we just wanted to protect those gains. Well, surprisingly, you look at the end of 2024 and it was surprisingly calm. Other than a brief dip in October, the markets kind of largely shrugged off the headlines. And history shows us that time and again, the markets care more about earnings and the numbers and, you know, inflation and rates than they care about politics. The markets don't really care about politics. So, how did the markets perform? Well, the S&P in 2024 rose just over 23%, making it actually the best 2-year streak since the late 1990s. The Dow gained nearly 13%, and NASDAQ is crushing it again with a whopping 28% increase. What's the lesson here? Well, uncertainty may feel uncomfortable, but staying invested during unpredictable times often leads to remarkable outcomes. There's a lot of people out there that wanted to take their money out of the market last year when it got scary, or take their money out of the market because the elections were coming up and they wanted to go get in there for 4.5% CDs or money markets or whatever it may be. And what you'll find is over the end of the year, had they just stayed invested in the market, they would have earned a lot more than that 4.5% or 5% or whatever it was that they got in their CD. So don't let fear take charge of your investing. Stay with your plan. And as long as you have a strategy in place before the uncertain times show up, you aren't just winging it like people think you are. You've got a plan and you're sticking to it. So, throughout 2024, I heard many investors say things like, oh, I'll wait till the election is over, or I'll invest when rates come down, or I'll think about it next year. I'm going to stay in cash for now. I'm going to get everything, like I said, in a 4.5% CD and wait till the market calms down. Well, the problem, as you saw, was procrastination during uncertain times. It often leads to missed opportunities. Your CD may have returned you that 4.5%, but you missed out on possibly much more had you invested. And if you're invested properly for your plan, your goals, and your situation, you should already have some guardrails in place that allow for a little bit of loss in these uncertain times, and it won't affect your overall outcome. It won't affect your overall plan or your goals. So let's actually take a moment to consider what these investors missed out on. One of the best 2-year stretches in the market in history, progress towards their financial goals, the loss of their most valuable asset. Anybody know what that is? Time. When we freeze in the face of uncertainty, we risk losing more than just potential returns. We lose time, which is all of our most valuable asset, and you can't get it back. So here's how we approach uncertain times for, say, our clients. One is that we're going to identify what we know and what we don't know about what's going on in the market. No guessing. It's you either know it or you don't. And then you're going to prepare for multiple outcomes. Rather, that means trying to predict one way or the other. We don't do that. We're not trying to predict anything. You prepare for multiple outcomes and you plan ahead. So should the market go swinging in one direction or the other, you've already got a plan in place that helps you move that direction. And then we're going to align every decision that we use with each client to their specific goals, to their specific situation, and we're going to know our boundaries. This method kind of ensures that no matter what happens, our clients know what's possible, know what the possible outcomes are, and they know how those possible outcomes will affect them because they'll know what their barriers need to be crossed before we make any major changes. So it's important to our clients to remain on track, and they understand that. So we received very few calls last year about clients' uncertainty in the market or in their plan. Most were just simply asking about what possible outcomes and what my personal thoughts were on the election or what my personal thoughts were about the tech boom. My clients know once there's a plan in place, we then just monitor and make small adjustments to stay within the predetermined parameters of their plan. So looking ahead, here are kind of the biggest questions that I'm looking out for in 2025. Is inflation truly under control? November, the data kind of suggests otherwise, but we'll see. I mean, again, nobody has a crystal ball. So, how will the new trade policies from Trump impact inflation and growth? I think we all know that Trump has a very long list of things that he wants to get done. And in the first few weeks here, he's already got a bunch of it in motion. So, how is all that going to affect the markets here and your plan and your guardrails? We'll see. I mean, that's something that you've got to keep an eye out for. Will the Fed continue cutting rates, or are they going to pause? What about the tech boom? What about the tech companies riding this huge wave? Will the AI, hype hold up? Our plan at Assurance Wealth Management is 2025 is kind of simple. It's stay flexible, stay informed, and stay committed to the long-term plans that we've already drawn up. Now, we'll continue monitoring these question marks and adapting strategies to ensure that our clients are successful. And most importantly, we will continue to keep our clients informed. We do these webinars. We've got a lot of YouTube videos. We've got a podcast. We've got newsletters. We've got all this information that we are constantly sending out to our clients, trying to keep them as informed as possible. So that way, being educated kind of reduces the fear and the uncertainty. But they need to know what's going on in both the markets as well as their personal plans. So we've got to keep them updated on both. Uncertainty is a constant, but it doesn't have to be a roadblock. With good strategies and focus on what matters the most, 2025 can be just as rewarding as 2024 or any other year, if not more so. There's nothing that says that just because we have a new president means the market's going to skyrocket. It also doesn't mean that it's going to fall. There's just nobody has that crystal ball, because if you do, you wouldn't be on this webinar. You wouldn't be listening to this. I wouldn't have a job. You just make all the money in the world. You got that crystal ball. So, you've got to be prepared to make adjustments as needed. And as we kind of reflect on 2024, the key takeaways was to embrace the uncertainty and to plan for it. You got to learn from years like these last 3 or 4 years. I mean, they've all been kind of crazy. So we've got to learn something from each one of these, and you'll always find a way to move forward. The markets always have rewarded resilience. In 2024, they did it. In 2025, they'll probably do the same. And, as Benjamin Franklin always said, that, if you fail to plan, then you're planning to fail. So I urge people to stop, kind of winging it when it comes to putting together portfolios, putting together financial plans, putting together their retirement plans, and get something rules-based within some guardrails, document it, so that way you take all the emotion out of everything. Uncertainty, fear, get rid of it. Get it out of your plan. It has no place in investing. You need to have rules that you're going to follow. If this happens, I do this. If this happens, I do this. And if you don't know how to create a plan like that, get some help. There's no problem going and getting some help with this. That's what the professionals are out there for. So once you've done all the hard work of putting the plan together for all the possible scenarios, then it's pretty simple. Stick to it. Just stick to it. So if you're kind of feeling uncertain about, 2025, the year ahead, that's okay. That's what we're here for. My team's here for. That's what other professionals like myself are here for. We specialize in helping clients kind of navigate the waters with confidence and with clarity. We'd be happy to guide you in 2025 or help you with anything, any questions that you may have. I'd love to hear from you no matter what. If you have any questions about finance in general, I just love having the conversations. So whether it's questions or concerns or ideas, let's start a conversation. And if you'd like to review your financial plan or discuss strategies or get a second opinion of what you currently have, I'd be happy to do that. I don't have a lot. This is a very short webinar today because I just wanted to go over what 2024 looked like, kind of what we're thinking about for 2025 moving forward, and what we're doing about it, both last year and moving forward, so that you have an idea of what you can do with your plans as well. Thank you. Thank you everybody for coming. I hope that 2025 is very prosperous and successful for all of you. And don't put anything off. If you've got to put a plan together, if you need to get some help with investments, go do it. Go do it now. The longer you wait, again, you're wasting time, your most valuable asset. So just move forward. Now I will sit here and sit here for a little bit and open up for Q&A if anybody has any questions or, obviously if it's specific to you or your situation, probably won't be able to answer it in this forum, but I can reach you one-on-one offline and we can go through it together there. But that's all I've got for today. And, there wasn't a lot to it. Just a recap and just what our thoughts are on what happened last year, our thoughts on what we're going to do moving forward. And then from here, it's up to you. It's up to you to make the decisions that you want to make to improve your financial life. So I'll open it up to questions if anybody's got anything. If not, thank you guys for coming. I really appreciate it. If you would like to get more of the information and educational materials that we send out via blog, emails, letters, YouTube videos, podcasts, more webinars. If you need any of that stuff, just shoot us an email and let us know that you would like to get some more educational information or you would like to sit down with somebody and talk about your plan or get a second opinion. Just let us know and we'd be happy to help you in any way that we can, or we'd be happy to get you on the list to make sure that you're getting all the educational information that we put together for you. August, what will interest rates do in 2025? It's a good question. I have no idea. If you can tell me what Trump's going to say at his next press conference, I can better help you with where things are going to go. The problem is when it comes to interest rates, the Fed is going to react to everything else going on in the economy, and with the amount of policies that Trump is trying to put in place, he could change a lot economically for businesses. For obviously, his favorite word right now is tariffs. There's a lot that can change, and the Fed typically just kind of reacts to that stuff. So while the anticipated notion is that the interest rates will come down a little, there's no certainty of that. There's no guarantee. Todd, did I mention how our clients did last year? I did not. So, and the reason for that is because there's no way for me to tell you what they did because they all did differently. We have everywhere from very conservative to very aggressive clients. Kind of with that said, off the top of my head, so don't quote me on this one, but off the top of my head, I believe our most conservative investors were in the mid-teens, low teens, somewhere in there as far as returns are concerned. Our most aggressive investors beat the S&P 500 by quite a bit. So it just kind of depends on your specific goal, your specific situation, how aggressive or conservative you are. So I can't give you any specific numbers. One, I don't think the SEC or compliance would really like that. But two is everybody's so different. Everybody's situation's so different. So if you would like to have a conversation to figure out kind of what type of investor you are, what type of um, investments you're currently in, and we can compare that to what we would have done, I can definitely do that for you, and you could know what that type of portfolio would have got last year. Craig, what are your broad strategies for 2025? Again, and I hate answering questions this way, but it's going to depend on everybody's situation. Everybody's so different. So the broad strategies are to stick to whatever your goal, your guardrails are. So if you are a 35-year-old making $400,000 a year, you've got $2 million saved up, you got a family of two, and you own a business, your guardrails, your strategy is going to look vastly different from the guy that's 65, has no kids at home, ready to retire tomorrow, or is already retired. Those two strategies look vastly different. So there's no way for me to tell you kind of what our broad strategy is because we customize everything that we do to your specific needs and goals. Todd, you are aggressive. Well, then you would have beat the market by quite a bit. I can tell you that. And I've got, I think, some of our most aggressive clients. When I talked about the gains that they had made between October of 23 and June of 24, we sold out of those so that we could then turn around and add more hedges and protect those gains. Between that time period, between that October and June time period, Some of them had investments in those accounts that were up 40%. Now their overall portfolio wasn't up 40%, but they had a good portion of it in certain investments and investment strategies that were up about 40% at that time period when the market was up around 19, 20, 21, somewhere in there. So is that normal? No. Is that going to happen again? I don't know. It could. It may not. I think you always see that the past results don't indicate future results, or however the statement goes. But you get the idea. Is that there's no guarantee on any of that. I can tell you for last year we had a very good year. How much longer will the bulls run, or is a correction due? I think a correction's been due for a while. And most strategists say the same thing. Again, they've been calling for a recession for probably the last 10 years. Everybody's been saying there's going to be a big recession for the longest time. And 10 years might be an exaggeration, but I think we are overpriced. I think especially the tech sector is overpriced. But does that mean we are going to get a pullback? No. Um, you know, we've had a couple of minor ones. We've had a couple of like 20 percenters that ended up coming back and getting back to even fairly quickly. So whether you want to call those corrections or not is up to you. Are we going to have a correction this year? I don't know. I don't know. If I knew that, I wouldn't be doing this for you guys. I'd be out on a yacht sipping margaritas. August, thank you. You're welcome. You're welcome. Thank you guys all for coming. I mean, I appreciate it. What area of the market will be most affected by a correction? And again, this would be a complete personal opinion. So, and I don't even invest our clients on personal opinions. Again, we look at facts, we look at what we do know and what we don't know, and we make adjustments that way. So when I say this, I want everybody to really understand this is a personal opinion. Don't take this and run with it. But if I were to guess on a correction and what sector or area is going to be most affected, I would say tech. And it's just simply because the run up that it's had in the last 2 years. And I understand that AI is a big thing. I understand that everything that Elon's doing and Tesla's doing and Apple, and I mean I get it. I get that all these tech companies are doing fantastic right now, and with AI kind of taking over the world, it's run up too far too fast in my personal opinion over the last 2 years. So if we were to get some sort of correction this year, I think tech would get hit the hardest. I've got a little bit more time if you guys want to ask any more questions. I'd be happy to answer. Or if you think of any questions once we get done in here, feel free to shoot me an email. Or if you just want to get some more information about what it is that we do or information about the markets in general. August, onward through the fog. You're right. I like it. It's an uncertain world that we're walking into. But I guess every day is, right? If you think about it, nobody ever knows what's coming tomorrow. Yeah, every day's a new adventure. So all we can do is plan the best we can, put our guardrails in place, know the adjustments that we're going to make if certain guardrails are hit, and stick to it. Is that stuff helpful for you guys? Are you finding some decent information in there? I know not everything we send out is going to connect with everybody, but are you at least getting some information out of those that you appreciate or that's helpful for you? All right, so Lawrence had a good question here. With market volatility, inflation, and potential changes to interest rates, what strategies should retirees and those nearing retirement prioritize in 2025 to protect their income, preserve their assets, and ensure long-term financial stability? Why do I feel like you had ChatGPT write that for you? I'm just kidding, man. That's a good question, and there's a lot to that. There's a lot to unfold there. So if you're retired or nearing retirement or thinking about retirement soon, and your number one goal is wealth preservation and generating an income, there's only a few ways to really do that. And so then it comes into play of what exactly are you looking for? What exactly is your money going to do for you? And then how much of it do you have? How much income do you need? And how much can you draw out of that on a monthly or annual basis to ensure that long-term stability like you're talking about? And what we typically do is we'll silo money. So you may have, I'm make up numbers here. You may have $1 million, and we're going to say, okay, he needs X amount of dollars this year, and we need that money to adjust moving forward because obviously with inflation and with all these different moving targets when it comes to the economy, $5,000 today isn't $5,000 10 years from now or 20 years from now. It's gonna, it's not worth the same. So what we always want to do is have a short term, a medium term, and a long term silo. And you siphon off, and how much goes into each one of them is different based off, again, your specific needs and how much money you have and your income needs and what items you may be paying off soon, or a lot of different factors go into that. But essentially, if you can silo off your money into short term, medium term, and long term and invest them appropriately for those terms, and then put guardrails on each one of them and say, hey, my short term, I need it for now. I need this right now. And this isn't going to get me a lot of growth. This is going to create my income for the next few years. The medium, term, we may be able to invest a little bit more aggressively than the short term because we want some growth out of this, because this is my next bucket that I'll dip into for income. So we want that to grow right now. And then our long-term silo, we're going to get the most aggressive in investing out of that. So that way it's growing, growing, growing while we're spending down the first two silos. So by the time that we get to that third silo, theoretically, you've got a lot more money in there now that you can draw from. So that way your income will stay, not going to say your income because the dollars amount will change over time with inflation, but your lifestyle can stay the same throughout the rest of your life. I hope that makes sense to you. But my best advice for 2025 or moving forward is, if you're looking for a long-term plan, long-term stability, kind of first of all, figure out what your goals are, figure out what your needs are, figure out what your wants are, and figure out how much money and income that you can create out of what you've got. And then silo that money off so that you use some of it now, some of it later, and then save some for the long term. Does that make sense to everybody? It was a long-winded answer, but it was a long question too. So, and again, with everything that we talked about today and all these answers that I'm giving you guys, please don't go run off and just, hey, this guy told me to do this in a webinar, I'm going to go do it now. No, do your due diligence. If you need a professional's help, get with a professional and ask. But, today was about education, and I'm just giving you some general ideas. Nothing I'm saying today is going to be fit for any one person's particular situation. All right, well, it doesn't look like we have any other questions coming in. If you do, again, email's up at the top there. Please feel free to shoot us over anything that you need, any questions that you have. Be sure to get back to you and answer those, as best I can. Other than that, you guys have a great 2025. May be very prosperous for you, and hopefully everybody stays healthy this year. Thank you very much. We will see you guys on the next one.